Good morning, traders. Welcome to the weekly wave count update from the Elliott Wave Street. I'm Juan Maldonado, and it's a pleasure to start the week checking some of the markets that we cover on our daily membership that you can sign up. At the end of the video, I'm going to give you more details if you want to receive the daily analysis. This is the euro. Last week, the plan was to find the end of the corrective wave, and the price, I have a sell trade at this area at the 121.60, and once the price breakout to the downside, it was pretty strong, the breakout. I started to adjust my stop loss. I was making like 15 pips because it took me out once it reversed. The plan was to get here first, and it went higher really fast, doing a 5-wave sequence. What a complex scenario, because usually we are looking for the market to lose momentum, and in this particular case it was gaining momentum. It was a strong move up, and with a V-type reversal, it reversed going to the targets. So that's good in terms of the wave count, but it's complex in terms of trading because it's difficult to jump in these quick moves. And the plan on during this week, is to have the euro returning back to this area, this low, the 119.50 area. And once we are there, I want to focus on finding the end of the market cycle in order to go long and target the 123.50. So mainly, I'm looking for a leg down and a leg up. Of course, I need validation here. Validation is a reversal. If the price, let's say that they collapse to the downside, like with a huge candle, for example, I'm not going to buy it. So I'm going to buy it if, first of all, the price goes down here and we have the price reversing. Validation is key. Now, on the lower time frames, there is something else I want to share with you, and is the fact that this move down has been so strong that we still have the chance of having this leg down as the wave A orange and having a deeper retrace before the continuation down. That will be fantastic. So if this scenario happens during the week, I'm going to sell it. I'm going to jump into the bearish trend. But if the euro continues doing this thing, maybe for a day trade, for a scalp, to jump in one of those swings, but not for a big trade, only if we have a big retrace. What about the dollar? Let's have a look at the dollar. The dollar jumped strongly to the upside. Last week we were checking that the price was doing this horrible expansion to the both sides, breaking to the upside, breaking to the downside. It's a nightmare when that happens. Well, it's going up strongly. We have the breakout of this 91 area, and the plan will be to go back to the 91.61 and maybe higher. This first leg up is really strong. So a strong US dollar for the week, unless the Fed goes crazy and do something with the bonds. The bond market has been going down strongly, and the Fed might do something. Let's see how the S&P moves today and this week to check if the Fed needs to do something. If not, if the bond continue lower, the price, not the yield, of course, yields are going higher, we are going to have the dollar going up. But it would be nice to have a corrective wave so we can jump in one of these trades. It could be on the Aussie dollar, could be on the New Zealand dollar, could be on the euro, whatever. Let's have a look at the S&P. The S&P has been doing a corrective wave, and after checking the chart last week, I'm not sure if on the free weekly video I was able to cover this part or not, but anyway, let's update in that case. I'm thinking that the S&P eventually is going to give us a deep retrace. And that would be fantastic. Like, I'm ready to have a big buy if that happens. I like to accumulate positions on the S&P for the long term, for savings. I like to buy the S&P during the road for years. I have been accumulating my positions for the longer term. This trade is for 15, 20 years where I would like to start taking profits. So that's something that I have been accumulating. So if we have the leg down back to this area, would be fantastic to have a big position. In the meantime, it seems that the bullish move is active. So it's telling that we are going to have higher highs. Actually, we can go to the 4,000, higher than the 4,000 during the month of March. And actually, on the lower time frames, the big concern is if wave 4 finished or not. So let's have a look at the lower time frames. The hourly chart, I believe we have pending one more to the downside before it starts to climb. But what if we don't have the leg down? What if that's it? The price already tested the lows, no more sellers, buyers are aggressive at this demand area. So it could be telling that that's it. So in that case, we're going to have a 5-wave sequence, the power of the 5-wave sequence. And that will tell that that's it. We will wait for the retrace. This will be this wave 1. We will wait for the retrace, and that will be the buy trade during the corrective. But first of all, we need to have the 5-wave sequence. Without the 5-wave sequence, we can't trade it. It is really important to have that 5-wave sequence first. All right, traders, now I want you to visit Elliott Wave Street. If you want to get the daily wave count analysis, you will get access to the membership with daily wave counts, daily videos, and more. Plus, I'm doing this special free course at the end of this month about volume profiles. You can sign up below the video. I'm going to leave you the link. You're going to get this website with the description of the master classes, and down here you're going to have the form to sign up. It's completely free. Volume profile with price action and Elliott Wave course, completely free. So sign up. I'm going to leave you the link below the video. Please have a fantastic trading week. I'll see you soon. Take care. Bye-bye.